Brian Shannon from AlphaTrends.net. Today's Friday, the 14th of May, 2021. We had a down week for most of the markets here. You can see the exception was oil and the financials, as well as the volatility index. Although volatility index, you can see, had a huge down day today. It's a volatile index. What can you say if you have volatile ETF? But overall, we have some damage done to these markets. So let's take a look here together. You can see the SPY is back above the volume weighted average price from the peak, so that's a good sign. It's also back above this prior level, which had the potential to become resistance. As we break down below a key level of support broken tends to act as resistance. Well, instead we saw the market gapped higher and continued higher throughout the day. So next week, as this 5-day moving average is still declining, I think it's most likely that we see some kind of little pullback in here down towards the 412, 413 level, hold above there, and if so, then we can continue higher. The Nasdaq, big move up today, but still clearly well off of its highs. If we take a look at the 15-minute time frame, you can see the volume weighted average price from the peak is still overhead. And what's more important is the direction of that and the direction of the 5-day moving average. They're both heading lower. So in order for a real bottom that can be trusted, I think you want to see maybe a move up through that level, comes back down, the 5-day moving average starts to flatten out in the next few days, and of next week maybe we see a little sharp, slight undercut, and then perhaps it continue to move higher. But we still need to be cautious with a declining 20-day moving average overhead. There's been some severe damage to a lot of the growth names, and if they don't scare you out, they will often wear you out in those individual names. The list of stocks that have gapped lower and has just continued lower is really pretty amazing. If you look at just look at some of these gaps and the subsequent lack of recovery. Ballard Power over here, FSLY. The people who buy these gaps lower are not getting a deal. That typically says, hey, someone big is in a hurry to get out, and they're likely to be able to continue to move out of the stock. iRobot was one, IRBT. That one continues to languish, as does LITE. MNST is another one. I mean, when these things gap lower, it is not a deal. It is not time to be buying these things. It tells you there's something severely wrong. Stay away from them, especially when we have a declining 50-day and a declining 20-day moving average. Those are not good stocks to buy. I don't care what anyone says. You can talk about your time frame being several years down the road or whatever, but why not wait for them to at least neutralize? The Russell 2000 came down to this band of support that has been so important for it over the last 3-4 months, and we did close back up with a little bit of a bounce in here, but still within an overall range. I mean, if you look at it realistically, this is the top end of the recent range, and this is the low end, and we're just kind of muddling in between, doing a whole bunch of nothing. So I don't see any real advantage to directional trading in the Russell 2000. Semiconductors came down to the volume weighted average price from the September low, and you can see we're getting a bounce there. Next week, this will be a critical level for the market. We can also look at the volume weighted average price off of these couple of peaks and see that those all kind of come together in that general area as well. Let's look at the 15-minute time frame. Here's the volume weighted average price off of that late April high, and we're still below that. Looking at the 30, and that would be, of course, where did I have that? That one, I guess, and off of this peak. So there's still damage done in the semiconductors. They're getting a bounce, and if you're trading the bounce, that's great. Just don't be too aggressive about holding on, I think. We've got this prior band of support up in here that has the potential to become resistance after that failed move right there, and a declining 5-day moving average. So in all of these, be careful about chasing. It's just ran from 225 to 235. Interestingly enough as well, if you look at the measured move, you can see that this high right here about 254, and then down here we'll just 233. So that's 21 points. If we take 21 points from this high of 245, that would give us a downward objective of 224, and that's basically where we came down to. So the measured move, point A to point B, typically equals this is point B to point C. So point C to point D would give us that measured move objective down in towards that 224 level. So, a couple things came together in that area to say it was an important level and a possible bounce area. Again, I'm looking at this as a bounce, and it will need time to heal further. I'd like to see it come down and do something like this maybe next week, and then begin to rebuild some strength and move higher. But for now, I'm still looking at it as very cautious going into next week. The biotechs undercut that 200-day moving average, which had been so important to it on the last four occasions. It undercut it, but did recover. So that looks more like a shakeout from a near-term perspective, but still overall just kind of ugly with the declining 20 and 50-day moving average just up overhead. It doesn't seem like it's going to be something that just takes off from here. We may have made a near-term low, but that doesn't mean it's going to be a good buy. It means that perhaps now we start digesting these gains more through time rather than the price correction that it is seeing. The financial stocks continue to be the real leaders here. They experienced some weakness, but then rallied up here. So what did we say? They did close higher on the week slightly. So a lot of strength there. Energy names still behave well. As you know, I was very bullish about those 2 weeks ago, and they continue to behave well. So hopefully you had seen on Twitter, I had put CME on as a buy right in here, 209. I sold some on that breakout, and currently, for my purposes, the last piece I have a stop underneath today's low. And what can you say about Bitcoin? That one finally came down to the year-to-date volume-weighted average price. I've been talking about that volume-weighted average price for the last several months, and we got a very nice bounce from there. I put that on Twitter. I had a bid in just at, I think it was 45.2. I don't remember the exact number. And then sold some just above 51 on this day, right? Same exact day. Now it looks like Bitcoin needs to settle back down, retest that volume weighted average price. And again, CME, nice trade there. And that's when the market was going lower. The nice thing about this market is it's providing opportunities in both directions. And if you're disciplined about it and a good stock picker, then there's plenty of opportunity. If you're not a good stock picker, I am. That's what I do at alphatrends.net each and every day. If you haven't taken a 2-week trial, now might be a good time to do that.